Hello everyone, welcome to the official YouTube channel of JAIIB CAIIB English Medium. I hope you all are doing well. Welcome to this particular session that is regarding your principles and practices of banking, Chalisa session. So before moving forward towards the session, first of all the very best for your today's paper of principles and practices of banking. So in this particular session, we are going to conduct the Chalisa session of your PPB in English medium, and in this session we will be discussing certain important concepts which are related to your PPB subject that is going to help you out in today's paper and the upcoming PPB paper as well. So let's start with the very first important concept of official valid document. Official valid documents are certain set of documents which are actually useful for the KYC purposes. KYC is simply a process, know your customer, which have to be compiled by each bank and financial institution to know their customer. And to know their customer, they need a certain 6 sets of documents which give them the identification of the customer. These 6 documents are known as official valid documents, which covers your passport, your driving license, your proof of possession of Aadhaar number, your voter identity card, your job card issued by NREGA, and your letter issued by the National Population Registry. These are the total 6 documents which tells us about the particular identification of a customer. Also, do remember PAN card is not anymore included in the official valid document. The second important concept is about the UTR number regarding RTGS and NEFT. RTGS is real-time gross settlement in which minimum 2 lakh rupees can be transferred 24/7 and there is no upper limit of the transfer. If we talk about the RTGS unique transaction reference number, this is of a 22-digit code, or I can say 22-character code that will be issued or that will be generated once you perform the transaction on the RTGS. Second, we have a UTR number of NEFT, that is National Electronic Fund Transfer. It is also a 24/7 service, but in NEFT there is no minimum and no maximum limit. In NEFT there are 48 half-hourly batches because it works 24/7, and the UTR number of NEFT have a 16 digits. Okay, so these are the UTR numbers. Apart from these two, we have another codes also that have to be remembered. First is legal entity identifier number, which have 20 digits. Second, we have magnetic ink character recognition that have 9 digits. Third, we have mobile money identifier that have 7 digits. Fourth, we have Indian Financial System code that have 11 digits. Fifth, we have SWIFT code, that is Society for Worldwide Interbank Financial Telecommunication, which have 8 to 11 digits. Then we have a personal identification number which covers 4 to 6 digits, and we have ISO NEFT 222, and same we have a ISO RTGS 222 now. So these are the certain numbers that have been asked in the earlier papers, so do remember all of them as well as their full form. Now let's start with the banker-customer relationship. If we talk about the banker-customer relationship, it represents that on the basis of contractual relationship between a bank and customer, what relation they actually conduct with each other. First, if you are depositing a money in a bank account, let's say for example I am opening a bank account in a bank, in that case I will be the creditor and bank will be the debtor. If I am taking a loan from a bank, in that case bank will be the creditor and I will be the debtor. If I am depositing or I am giving a certain valuables of mine to a bank to secure it in the safe custody, in that case bank will be belly and I will be a beller. And if I am renting out the locker in a bank, in that case bank will be a lessor and I will be a lessee. Next thing we have, in case of any standing instruction, if I am giving bank, in that case bank will be agent and I will be principal. This standing instruction can cover your collection of check. It can cover your standing instruction, any kind of like payment of premium, payment of my bills or payment of my taxes, whatever it is. It can be sale purchase of securities on behalf of me that I am ordering bank to perform. It can include your shares given by sale. So any order if I give to bank to perform on behalf of me, in that case bank will be an agent and I will be a principal. Apart from that, if I talk about if I purchase of draft if I am doing, so bank will be a debtor and I will be a creditor. Okay, because why I am a creditor? Because I am giving money to the bank, on behalf of that money bank is giving me a draft. So that's why bank will be a debtor and I will be a creditor. Second, if I am paying a payee of a draft, in that case the bank will be trustee and I will be a beneficiary because I will get the money of the draft. Then apart from that, if I am taking a loan from a bank and I give a movable security to bank whose possession will remains with the bank, in that case that security will be created as a charge of pledge. In pledge, bank will be the pawner and I will be the pawnee, or we can say the bank will be the pledgee and I will be the pledger. Okay, Apart from that, if I am taking a loan from a bank on an immovable property like a home loan, in that case, usually the possession remains with the borrower, but sometimes it can goes to the lender as well. In that case, I will be a pledger, I will be a mortgager and bank will be a mortgagee. Apart from that, if I talk about the trustee and beneficiary case, if I deposit a certain amount of money and give an instruction not given for the disposal to the bank, in that case bank will be a trustee and I will be a beneficiary. If I left a certain article by mistake in a bank, in that case also bank will be a trustee and I will be the beneficiary. Also, if I take a loan from a bank and gives the movable security to the bank as a security, in which the possession and ownership both will remains with the borrower, in that case bank will be the hypothecator and I will be the hypothecator. Do remember one thing, that in case of pledge, bank will be a pawner and customer will be a pawnee. But in case of mortgage and hypothecator, these are opposite. In case of mortgage, bank will be a mortgagee and I will be a mortgager. In case of hypothecation, bank will be the hypothecatee and I will be the hypothecator. So these relation between bank and customer in case of pledge and mortgage hypothecation will be opposite. Okay, to remember that. So these are the certain important banker customer relationship. Now we have a money laundering. Money laundering simply means conversion of black money into white money. Black money means the money that you have earned from the illegal activities, that can be drug trafficking, human trafficking, etc. And when you convert this black money into white money, it is known as your money laundering. It will be done in the 3 stages that covers your placement, layering and integration. Placement means when we enter our illegal money into the legal financial system by depositing that money in a bank account. Second is layering. In the layering, we create a complex network of transactions so that the money cannot be easily found out by the banks or any other government authorities. In layering, we create a complex network of transaction that will be like I am transferring money from A to B, B to C, C to D, D to E, E to Z, Z to Y and Y to A. So this is a complex network of fund transfer I have created in a bank account. Or I can invest my money in the different financial sector. Let's say some money I have invested in the share market, some in commodity market, some in real estate market, some in life insurance policies, some in gold market, some in your derivative market. So this is also a complex network of transaction. Why we are creating a complex network of transactions? So that the money which we own cannot be easily identified by bank or any other financial institution. The third one is the integration. In integration, we create our own personal assets. When we create our own personal asset, it can be your bungalow, it can be your business, it can be your luxurious cars. And now if somebody asks from where you have purchased this bungalow, from where you have purchased this luxurious cars, I have a legal source of income which I can show from the layering stage. So that's how money laundering will be done. In the placement, we have entered the black money into the economy by depositing the money in the bank account. And in integration, we showed that black money in converting into white money, which have a legal source of income from the layering stage. So this is the money laundering. Apart from money laundering, the next important stages are of a financing of terrorism. Financing of terrorism is some kind of a money laundering, but not a black money, but yes, it is a transaction in which terrorist organizations are using the banking channels to raise money and to move money, to store money and to use money for the terrorist activity. So there are 4 stages in this financing of terrorism, that is raising, moving, storing and using. Raising means you are raising money from the market, from the multiple sympathizers of yours. Second, you have a moving, in which you are collecting money from across the world. So you have to move that money to your terrorist organization at a particular place where your terrorist organizations are. Then you will store that money in that location in a bank account or in the banking channels. And the last one will be using, from withdrawing bank accounts money. You can use that particular money in the terrorist activity. So these are the 4 stages of financing of terrorism. Next, we have a money laundering offenses. The 3 sections are very important. Section 5 tells us about the offense of money laundering, like when it will be counted that this is the money laundering offense that have been performed by the person. So it says simply, whoever person directly, indirectly, knowingly, unknowingly includes, involved in any process or activity which is connected with the proceeds of crime, that include its concealment, its possession, its acquisition or use, and projecting or claiming it as unattained property, it shall be a guilty of offense of money laundering. So if any person perform this, that guilty will be known as a money laundering. That's defined under the section 3 of Prevention of Money Laundering Act 2002. The same act section 4 talks about what will be the punishment if person find out guilty of the money laundering, and the section 4 says that the person have to go through the imprisonment for not less than 3 years and but up to 7 years, and also the person have to pay the penalty fine in the case of your money laundering. So both things will be there, 3 to 7 years imprisonment as well as the fine have to be paid. If the person is guilty in connected with the offense under the narcotics, drugs or psychotropic substance, in that case the imprisonment can increase from 7 to up to 10 years, like 3 to 10 years imprisonment will be there. Apart from that, section 45 of Prevention of Money Laundering Act says that if any person found guilty of a money laundering, this offense under the PMLA Act is deemed to be cognizable and non-bailable offense. Okay, it will be a case in which no bail will be provided to the person who became guilty of a money laundering. So these are the section 3, 4 and section 45 of PMLA, that is very important. Next we have a customer definition as per KYC now. So section 2HA of PMLA defines customer as a client. Client means a person who is engaged in a financial transaction or activity with a reporting entity, and it includes a person on whose behalf the person who engaged in the transaction or activity is active. So simply any person who performs the financial transaction or activity or with the reporting entity or the reporting organizations of your, it also includes those persons who behave on behalf of the someone else. They are also counted as a client. So definition has been adopted by RBI in Master Direction of 2016, in which RBI said a customer for KYC norms perspective differs in from the traditional means of customer. So it includes, it says, RBI says that includes not just person in whose name the dealings are carried out with the bank, but also those who actually act for such person. Okay, like if someone else is acting on behalf of you, that person who is acting will be also counted as a customer of a bank. Apart from that, it covers not only the account holder and those having continued relationship, but also those who avail for any service on or on one-off basis. So it's not like that a person have to be continuously being with your service or being connected to you. If a person comes to you and take a certain one service, even that person will also be counted as a customer on the basis of your KYC. Okay. Next, if we talk about for the purpose of KYC requirement, bank need to include a wide range of person who are availing services. Like what? Like a bank account, including fixed deposit, your credit facility, your remittance facility, your demat account, your public provident fund account, your pension fund account, your third party products, your safe custody services, your safe deposit locker services, your receiving remittance or for payouts. If any person taking any kind of these services, that person will be counted as a customer of a bank. Apart from that, beside the following person also consider customer, like in case of entities availing services, their beneficial owner, and in case of accounts maintained by professional intermediaries for their beneficial for their transactions or for their clients beneficial transaction will be included. So any person who is performing any of these activity will be counted as the customer of a bank. They will be counted as what? They will be counted as a customer of a bank. Now next we have, that is KYC policy is what? It is a comprehensive document that contains norms which are related to handling of the customer business. Your organization setup for the various responsibility, it create awareness among the customer and staff. So KYC is simply a very important aspect in the banking sector. Without the KYC, you cannot make any contractual relation with any person. Now, the key elements of KYC policy cover customer acceptance policy, customer identification procedure, risk management and monitoring of transaction. These are the certain key elements of KYC policy. Apart from that, there is an organizational setup for AML. So PMLR, Prevention of Money Laundering rules, stipulated that banks must designate following functionaries for meeting PMLA obligation. The first one is designated director, second one is principal officer. So if we talk about designated director or principal officer, besides each bank has a different function to discharge responsibility of monitoring and reporting under the PMLA, other functional units have to discharge respective functions pertaining to KYC AML obligation. So two parties, that is designated director and principal officer, are the functionaries for meeting the PMLA obligation. Like they have an obligation to meet the PMLA criteria. Now designated director is responsible for overall compliance with the obligation of the bank as spelled out in the PMLA section 11A, 12, 12A, 12AA. It means designated director have a responsibility that whatever defined under these section of PMLA Act, they have to be compiled with. And the PMLR and the regulatory guidelines of the regulator concerned will be followed by the designated. So the designated director shall be functionary who is the managing director in case of a company. Second, managing director or a whole-time director in case of a company. The designated director will be a managing partner in case of partnership firm. The designated director will be a proprietor in case of proprietorship concern. The designated director will be managing trustee in case of a trust. The designated director will be a person or individual as the case may be in case of your unincorporated association or a body of individual. A designated director can be a person who holds the senior management position or equivalent position in case of cooperative banks and RRBs. So in what type of regulated entity, what role the designated director have performed, that have been defined under this. Okay. Now if we talk about the designated director is also responsible to ensure that the bank has appropriate functional setup, system and processes for KYC AML requirement, so that bank will be capable of implementing all the KYC and AML requirement. Second, it also says that the bank keeps the KYC policy duly updated. That have to be checked by the designated director. Also, the designated director have to ensure that the banks has a skilled staff at all the levels who are skilled in the KYC AML requirements. Also, designated director is responsible to ensure that the bank takes suitable measures with changing complexion of money laundering and terrorism financing. So these are the responsibilities that have been given to the designated director. If I talk about principal officer and the money laundering reporting officer, we can call it. So banks must designate a senior officer as a principal officer in terms of your PMLA. So the main function of principal officer is monitoring implementation of banks KYC and AML policy. Like is it implemented properly? Is it implemented on a time? Everything have to be checked. Reporting of transaction to and sharing of information with the Financial Intelligence Unit India is the responsibility of principal officer. Apart from that, maintaining liaison with law enforcement agencies. It means maintaining a particular liaison relationship. It means interpersonal relationship with the law enforcement agency should be there. Apart from that, the principal officer have to ensure submission of periodical reports to the top management and the board. Principal officer also have to make sure that they are keeping the AML monitoring system updated in a bank. So these are the responsibilities that have been given to the principal officer. If I talk about the AML team, the different functional unit is put in place for taking the necessary measure for the compliance with the legal and regulatory AML CFT situations. So it says that AML team have to review and update KYC policy regularly in a bank. The AML and AML team have to guide the business operations functions in respect of your customer identification and due diligence. Like they have to inform that if we are talking about the customer identification and due diligence, what are the things have to be considered in that case. The AML team also undertake the money laundering and terrorist financing risk assessment of the bank and review it periodically. Like how many chances of risk is there in a bank of the money laundering and terrorism financing, it will be undertaken by the AML team. AML team also assists business operations unit in customer risk categorization. AML team also monitor the transaction for detection of suspicious transaction. Like if any suspicious transaction is happening, that can be detected by the AML team. AML team also submit various prescribed reports and any information that sought to the FIU-IND, that is Financial Intelligence Unit India. Apart from all of these, what are the reporting obligation of the principal officers when it comes to the reports? So there are 5 total reports which have to be submitted by the principal officer to the FIU-IND. The first 4 reports have to be submitted for each calendar month by 15th of the following month. First is cash transaction report. In the cash transaction report, the cash transaction of 10 lakh or more or equivalent. Second condition is that the cash transaction report have to be submitted in case of series of cash transaction in a month integrally connected to each other and they are aggregating 10 lakh or more or equivalent. Second, cross-border wire transfer report have to be submitted. That cross-border wire transfer of more than 5 lakh or equivalent were either the origin or destination of funds is in India. Third is non-profit organization report. It says that receipts by non-profit organization of more than 10 lakh or equivalent. And the counterfeit currency, all the counterfeit currency notes that have been received by the bank branch. Okay, so counterfeit currency means the fake currencies that have been received. Now the fifth report is a suspicious transaction report, and it have to be submitted by principal officer to the FIU IND within the 7 days of establishing the suspicion. So whenever you establish the suspicion on any transaction, within 7 days of that you have to inform it to the FIU IND. In case of suspicious transaction report, there is no monetary value defined, and also for any monetary or any non-monetary transaction which is suspicion in context to the bank, like bank feels like this is a suspicious transaction, in that case all the monetary, non-monetary transactions have to be informed to the FIU IND. Okay, so that is what suspicious transaction report is. Apart from that, the next thing is implication of non-compliance of PMLA application. If any bank or any principal officer do not compile, or designated officer do not compile with the PMLA obligation, in that case the penalties will be charged. So bank face risk of penal action by RBI and the director of FIU IND for non-compliance with the obligation cast on them under the PMLA or PMLR. The first thing is that the PMLA has empowered the director of FIU IND to take any of the following punitive measures against a bank, the employees of a bank, the managers and the directors. So the FIU IND director can issue a written warning against any of them. It can direct to take a specific remedial measure and submit the action taken report on these. Also, it can impose monetary penalty with a minimum of 10,000 to the maximum of 1 lakh per violation. So these are the certain punitive measures that can be taken by the Director of Financial Intelligence Unit India against a bank, any of its employee and its managers or its directors. Okay, in case they do not compile with the PMLA or PMLR obligation. Next, we have a beneficial owner. If we talk about the beneficial owner, it's simply a person who enjoys the benefit of ownership, though the property title is in the another name. So I am, let's say for example, I am the beneficial owner. So I do not own the property, I do not have the ownership of the property, but on the behalf of the owner, I actually enjoy the benefits of ownership. Okay, for a legal person, the beneficial owner who is or are natural person is or are required to be identified, and all reasonable steps to be verify his, her or their identity are undertaken keeping in view the following norms. The first thing is, where the customer or the owner of the controlling interest is a company listed on the stock exchange or is a subsidiary of such company, it is not necessary to identify and verify the identity of any shareholder or beneficial owner of such company. It means simply where the customer or the owner of the controlling interest is a company that is listed on the stock exchange, or it's a subsidiary of the company which is listed on the stock exchange, it is not required to identify and verify the identity of the shareholder or the beneficial owner. But in case of your trust, nominee or fiduciary account where the customer is acting on behalf of another person or trustee, the nominee or any other intermediary is determined. In such cases, it's important that satisfactory evidence of the identity of the intermediary and of the person on whose behalf they are acting also have to be taken. And the criteria for determination of beneficial owner essentially are: first, ownership or entitlement in the capital, property or benefit of the entity meeting certain threshold value. So the criteria of to be called as a beneficial owner, it depends on what? It depends on the ownership or entitlement in the capital of a person or in the property or benefit of a person. Okay. Second criteria is control exercise over the activities of the entity through any other means. These are the two criteria on the basis of what we define the beneficial owner. You can see in case of company, the criteria or the person who wants to become a beneficial owner should be a participant of more than 25% shares in capital and profit, or the control rights will be they can appoint majority of directors, they can control the management and the policy decisions. Second, we have a partnership which is registered more than 15% share in the capital or profit. If any person holds, that person will be known as beneficial owner. Third, body of individual, association of person, in that case more than 15% capital, profit or property If any person holds, that person will be a beneficial owner. And in case of your trust, author, trustee, beneficiary having 15% or more interest and any other person exercising effective control, in that case that person will be known as beneficial owner. One important note is that if no natural person fulfill any of these criteria for company, for partnership, for body of individual, for trust, in that case the individual who is holding a senior managing position will be considered as a beneficial owner. Okay, the senior managing post will be only applicable if the person if there is no natural person who fulfill the above conditions in case of the 4 categories. Then the person will be, natural person will be, who is actually holding a senior managing position, will be called as a beneficial owner. Okay, now CDD is the customer due diligence, which actually identify the customer from every aspect. So there are 3 ways, there are 3 particular ways by which the customer due diligence can be done. So customer due diligence procedure for large number of customer and customers located in a different location, following the alternate modes for the CDD. The first is your CDD by third party. Like third party will be performing the customer due diligence on behalf of a bank. Second is video based customer identification process, in which you will be able to perform the video based customer identification. And the third will be your digital KYC. By the help of digital KYC, you will be capable of finding out or performing the customer due diligence of a customer. Okay, so these are the 3 alternative modes by which the customer due diligence can be done. If I talk about the first one, that says your by third party, if banks are permitted to depend on the CDD by third party, it's subject to the certain condition, like record or the information of the CDD is obtained within 2 days from the third party or from the central KYC record registry. Within 2 days the bank have to take the information or the record in case of CDD by third party. Also in case of third party CDD is there, the ultimate responsibility for the CDD or applicable enhanced due diligence measures, it lies with the bank. Okay, so at the last, responsibility lies with the bank only in case of third party CDD. Okay, video based customer identification process is simply when bank use digital channel for onboarding a customer. It is called the video based customer identification process, in which it have been said that simply the bank should be using technology infrastructure, should be housed in own premises of a bank. So VCIP infrastructure should be within the bank premises, should be there. VCIP connection and interaction should originate from own secure network domain, so that nobody else can find out the detail about the customer or any VCIP process. End-to-end encryption of data should be there. Video recording should be containing the GPS coordinates and the data and time stamp, in which date, at which time, at which location you are performing the VCIP with the customer, that have to be seen on the video recording of yours. Application shall have face liveness, spoof detection and face matching technology also. Vulnerability assessment, penetration testing and security audit should be required. The customer consent should be recorded in an auditable and alteration proof manner. And the application should prevent connection from IP address outside India or spoof. But one more thing is there, the process shall be operated only by the official of the regulated entity. Not like anybody can perform this. Also, the sequence or the type of questions during the video interaction shall be varied for every customer. You cannot ask the same number of questions in the same sequence from every customer whom you are onboarding in the bank. The sequence should be different, the type of question should be different. Okay, so these are the certain things in the VCIP. And if we talk about the digital KYC, in case of digital KYC, simply this is the process permitted for digital onboarding of a customer. It process requires the bank's officer to meet the customer in person, and the services of business correspondent can also be used for the digital KYC purpose. Okay, so these are the 3 alternative modes by which the customer due diligence can be done. Then wire transfer. The wire transfer limit is 50,000. So wire transfer is simply the transfer of fund, which is essential component of modalities for money laundering, financing of terrorism and the financial crime. So with the advent of the technology, its adoption by the financial system wire transfer have come into prominence. The more we are providing the electronic services or the online services, the more the cyber risk is increasing. So these therefore carry high risk of money laundering, financing terrorism, and the financial crimes. So to mitigate such risk, the wire transfer following norms have to be followed, in which says that the domestic wire transfer is happening of, let's say, amount of 50,000 and above. It should be accompanied by the originator information like the name, address, and account number, like which person actually originated this wire transfer from India. It have to be taken. Then domestic wire transfer structuring is that if a customer is found to be intentionally structuring wire transfer below 50,000 to avoid the reporting or monitoring, it is identification should be done. In that case, the non-cooperation from the customer, effort shall be made to establish his identity, and STR shall be made to the FIUID, because the customer intentionally was performing the transaction of less than 50,000, so that the monitoring and reporting of that particular customer won't be done. So this have to be informed to the FIUID. Okay. Then we have a central KYC record registry. If I talk about central KYC record registry, it maintains the details, it maintains the data of each and every person, which is known as your central KYC record registry. And if we talk about the central KYC record registry, it is the entity authorized to receive, store, safeguard, retrieve the KYC record of a customer in the digital form. So Government of India has authorized the CERSAI. CERSAI stands for Central Registry of Securitization, Asset Reconstruction and Security or Interest of India. So Government of India actually appointed the CERSAI to act as and to perform the function of the CKYCR. Okay, that is a Central KYC Record Registry. So banks are required to capture the KYC templates or KYC information for sharing with the CKYCR in the manner which is mentioned under the PMLA as per the revised KYC templates and the following operational guidelines issued by the CKYCR. So it has been said that banks are required to upload regularly on the Central KYC Record Registry the KYC data pertaining to all individual accounts opened on or after 1st January 2017. Also, it says that banks are required to upload KYC record pertaining to accounts of legal entities which are opened on or after 1st of April 2021. For individual, the date was on or after January 2017, and for legal entities, it is on or after April 2021. In case of accounts of individuals opened prior to the 1st January 2017 and those legal entities opened prior to the 1st April 2021, it have been said that the KYC record of these have to be uploaded on the CKYCR during periodic updation. And the periodic updation of KYC for high risk customer is every 2 years. For medium risk customer, it is every 8 years. For low risk customer, it is every 10 years. So whenever the time of these accounts comes for the periodic updation, then their detail of KYC have to be updated on the CKYCR. Also, the KYC information should be uploaded within 10 days of commencement of account based relationship with the customer. Okay, so these are the CKYCR conditions. Now, account of illiterate person. The rules related to the account have to be clearly explained to an illiterate person in a language which is understood by the illiterate person. And also, if the person should be advised that for withdrawing money from the account, the person have to personally come to the bank with the passbook every time. It means they cannot withdraw the money from the ATM. They have to come to the bank by taking a passbook. A current account should not be opened in the name of an illiterate person. Also, the checkbook should not be issued for the illiterate person under any circumstances. Even in case of a joint account, the illiterate person cannot have a checkbook. Left hand thumb impression should be taken of the account holder on the account opening form in the presence of the authorized bank officer and the person well known to the bank who will attest her thumb impression on the account opening form, like attested by the witness. Passport size photograph of the customer have to be obtained and one to be attached to the account opening form and another should be attached to the passbook of a illiterate person. Next thing is that for every withdrawal should be orally confirmed by the account holder to the authorized official. Okay. Then if the illiterate depositor intend to allow a literate person to operate their account, he has to submit an authorization cum indemnity letter prescribed in the format with the condition that it can be operated only jointly by both of the person. So no illiterate person account should be opened with the operational facility of either or survivor or by literate person only. In case of either or survivor, it means the literate person or the illiterate person, any one of them can use the account. No such condition should be given to the illiterate person's joint account. Second, literate person only will also not be allowed. If you want any literate person to manage your account, in that case you have to give the written consent to the bank. Also, it will be managed only with the condition of jointly managed. It means both literate and illiterate persons permission is required to perform any transaction in the account. Now, the account of a blind person, there is no legal bar for the blind person to open a bank account. Due care must be exercised in account of blind person, as there may be not a consistency in their signature, as they depend on someone else. So the chance of being cheated is greater. So account holder may send a messenger for transaction whose reliability may not be known to the bank. Also, the passport size photograph have to be taken. One will be attached to the account opening form, one will be attached to the passport. The signature thumb impression of the blind person has to be attested by a person well known to the bank. Also, where the branch manager is satisfied, he may allow a blind person to operate the account by herself or by next of kin of the blind person. Like the next relative of a blind person can also be allowed by the branch manager to manage the account after taking a proper letter of authority from the blind person. Okay. Next is, whenever inconsistency in the signature of a blind customer is noticed, her left thumb impression have to be taken. Also, the entries and balance must be made up to the date in the passbook at the time of each transaction and should be read out to the blind person when no other person is in the hearing distance. Then you have to tell them orally also that this is the remaining balance and this is what you have withdrawn. Now, in case of account of minors, according to Indian Majority Act 1875, every person domiciled in India, including a minor, for whom a guardian for the person or property is appointed by a court, attains the age of majority on his or her completing the age of 18 years. As per the section 11 of Indian Contract Act 1872, when the age of maturity has been provided by the law to be 18 years, any person less than that age, even by a day, would be known as a minor. Okay, and it have been said every person is competent to contract who is of the age of maturity or maturity according to the law. So who is of a sound mind and is not disqualified by any particular law which is subject, which he is subject. Apart from that, the essence that it is the minor is not competent to enter into a contract. So this affects his capacity to hold, acquire or dispose of the property. The minor cannot enter into the contract. Also, with a view to in calculating the habit of thrift or savings, bank allows a minor of above age of 10 years and above that they can open and operate their deposit accounts independently, subject to the certain conditions. So opening of minors account need completion of KYC formalities of both minor and their guardian, and also ascertaining and recording in bank's system for her date of birth, so that whenever the person became major, the bank should know it. Okay, the father is the natural guardian for opening the account of a minor, and RBI also permitted that to open minor's account with the mother as a guardian is also allowed. So the term natural guardian does not include a stepmother or stepfather. The minor should be illiterate. Two minors cannot open a joint account. Also, RBI has allowed the banks to offer facilities like internet banking, ATM, debit card to a minor, ensuring that the minor's account will not be overdrawn. Apart from that, bank can decide on the document that will be needed to open the account of a minor. Okay. Now, the regulations for operation or rules for operation in case of minor account. First, the minor account should not be allowed to be overdrawn. Section 26 of NI Act says that the minor may draw, endorse, deliver, negotiate a negotiable instrument. As such a minor can draw a check. Also, on the minor attaining majority, the guardian is not allowed to operate the account any further and without confirmation from the minor who became the major now. Also, banks are free to fix the minimum age at which the bank allows the minor to operate the savings bank account independently, and that age right now is 10 years and above. Apart from that, ordinarily balance in such accounts are subject to maximum amount as decided by the bank. In the event of death of the minor, the guardians has to close the bank account, and on attaining the majority, the minor should confirm the balance in her account. Fresh operational instruction will be taken. Fresh specimen signature of a minor should be taken, because now onwards the minor will manage the account, not the guardians. If the guardian died during the minority of the account holder, the balance will be paid to the minor when he or she attains the maturity. So these are the rules for operations in the account. Next, another important terminology, we have a legal entity identifier. Legal entity identifier is a 20-digit alphanumeric number which is used to uniquely identify the parties to financial transaction worldwide. So post global financial crisis, for improving the financial data accuracy and quality and helping better in risk management, the concept of uniform global legal entity identifier was introduced. So the banks, including scheduled commercial bank other than your RRB, local area bank, small finance bank, they all are requested to make it mandatory for the corporate borrowers who are having a aggregate fund based or non-fund based exposure of 5 crore and above from any bank to obtain a LEI. So if any corporate takes a loan of 5 crore and above from any commercial banks, they have to take a legal entity identifier number. Okay. Also, it have been said that the borrowers, the exposure of the whom scheduled commercial banks is 50 crore or more. Timeline for obtaining LEI by individual borrower enjoying the aggregate exposure of 5 crore and above from the banks and financial institution have been given a time limit. And the time limit is that if any customer have a exposure of above 25 crore, they have to get the legal entity identifier by the April 30, 2023. For those who have a exposure above 10 crore up to 25 crore, their date was 30th April 2024. Now the exposure limit of the borrowers from 5 crore and above and up to 10 crore, that is April 30, 2025. So these are the dates in which have been said that the customers should get the legal entity identifier. In order to harness the benefits of legal entity identifier, RBI has decided that the authorized dealer category 1 with effect from 1st October 2022 shall obtain the legal entity identifier number from the resident entities undertaking capital or current account transaction of 50 crore and above. Okay, that is under the FAMA Act 1999. Also, LEI has been made mandatory for the legal entities for certain types transaction that include your NEFT, RTGS of 50 crore and above. So if any individual or any legal entities, if performing any transaction including NEFT, RTGS of 50 crore and above and borrows with credit facility of 5 crore and above from the banks and financial institution, as per the prescribed time schedule, they have to take a legal entity identifier number. Okay, so these are the conditions of legal entity identifier number. Now, a current account cannot be opened by these particular customers or these type of customer that include your minors. Minors cannot have a current account. The Pardanashin women cannot have a current account. The illiterate person cannot have a current account, as well as the blind person cannot have a current account. These are the customers who cannot have a current account. If we talk about the savings account can be opened by the individual either in single name or joint name of 2 or more persons. Minor age above 10 years and above can open and operate the savings bank account independently. Karta of Hindu undivided family can have a savings account. Entities of category for which RBI has given general permission, they can have a savings account. What are these entities? These are the list. The primary cooperative credit societies which is being financed by a bank, they can have savings account. Khadi and village industries have savings account. Agriculture product market societies registered under Societies Registration Act. Companies licensed by the central government under Section 8 of Companies Act 2013 or Section 25 of Companies Act 1956. Then institution other than those mentioned in subpara A above and whose entire income exemption from payment of income tax under the Income Tax Act 1961. Then the government department, bodies, agencies in respect of grants, Subsidies released for implementation of various department schemes sponsored by central government, state government, subject to production of an authorization from the respective central or state government department to open a savings bank account, development of women and children in rural areas. Apart from these, self-help groups, register or unregister, which are engaged in promoting savings habit among their member. Also the Farmers Club, Vikas Volunteer Vaini, they all are allowed to open a savings bank account. They all have been allowed by RBI to open a savings bank account. So these are those organizations for which savings bank account is permitted by RBI. Okay. Now certificate of deposit, if you remember the certificate of deposit, it is simply a short-term negotiable money market instrument. Certificate of deposit are not in the nature of the other bank deposit but are distinct category. So the certain silent features of certificate of deposit is include certificate of deposit can be issued by the scheduled commercial bank, RRB, small finance bank to all person who are resident in India. So certificate of deposit are issued by the bank and financial institution. The minimum amount that can be certificate of deposit issued is 5 lakh, thereafter multiple of 5 lakh. Minimum time period is 7 days and maximum is 1 year for which it can be issued. Interest rate may be fixed or floating, linked to the benchmark rate specified by the Fixed Income, Money Market and Derivative Association of India. Certificate of deposit may be issued at discounted value or with a coupon for the interest. Certificate of deposit are traded in the secondary market as well. Buyback of certificate of deposit can be done if offered to the investors in the specific issue of your certificate of deposit, and it can be done after the 7 days of your issue of the certificate of deposit. Then issuance of certificate of deposit attracts the stamp duties as well. Okay, so these are the certain features or the silent features of a certificate of deposit. Then if we talk about inoperative accounts and unclaimed accounts or deposits, these are those accounts, those savings account, current account in which customer do not carry any transaction after some point of time. Several fixed deposit remains unclaimed after the maturity for prolonged period. So such accounts seemingly harmless, carry a risk of being used for fraudulent activities by unscrupulous persons, whether employee or outsider. So simply those accounts which have not been used by the customer from a certain period of time, they will be converted into inoperative account or unclaimed deposit. But there is exceptional cases. The category of account are there, even if they remain dormant, need not to be transferred to the inoperative account status. The conditions are, first says that when the operations in the account have been under the Garnishee order or any court order, if the nature of the account itself permits only periodical and not regular operation, where the account is under lien or charge for advance allowed to the same customer in another account, or where the account is showing debit balance. In all these cases, if the account is dormant but still it won't be transferred to the inoperative account status. Apart from that, then we have a DEF scheme. All the inoperative accounts, money will be transferred to the DEF scheme. It stands for Depositors Education Awareness Fund. In 2014, RBI has established Depositors Education Awareness Fund under provision of Banking Regulation Act. The banks are required to transfer the credit balance in any account or any deposit in a bank which remaining unclaimed or inoperative for a period of 10 years or more to the fund. So if any customer is not utilizing or not performing any transaction in their bank account, whether it is current savings, FD or RD, their amount will be transferred after 10 days, 10 years, 3 months to the DEF scheme. It covers savings bank deposit account, fixed or term deposit account, cumulative recurring deposit account, current deposit account, other deposit accounts in any form or with any name, cash credit account, loan account after due appropriation of the bank. Then we have margin money against issue of letter of credit or guarantee, outstanding telegraphic transfer, mail transfer, demand draft, pay order, banker's check, sundry deposit account, vostro account, interbank clearing adjustment, unadjusted national electronic fund transfer, credit balance, and other such transitory accounts, unreconciled credit balance on account of automated teller machine transaction. For all these transactions, or if the customer is not using the account or not performing any transaction from the last 10 years or more than 10 years, then the money of these accounts will be transferred to the DEF scheme, that is Depositors Education Awareness Fund. Okay. Sorry. Apart from this, the undrawn balance amount remaining in any prepaid card issued by the bank but not amounts outstanding against the traveler's check or other similar instrument which have no maturity. Then rupee proceeds of foreign currency deposited held by the bank after conversion of foreign currency to rupees in accordance with extant foreign exchange regulation. Also, such other accounts as may be specified by RBI time to time will be transferring the amount of their accounts money after 10 years, 3 months to the DEF scheme. So this fund is intended to be used for purpose of education, like for the financial literacy purposes, and the amount is credited to the fund within 3 months from the expiry of the 10 years. So when the 10 years will be completed, after completing 10 years, after 3 months, the fund will be transferred to the DEF scheme. The fund is utilized for the promotion of depositors' interest as specified by RBI. The depositors is entitled to claim from the bank his or her deposit or any unclaimed amount or operate the account even after the amount has been transferred to the fund. So after transferring fund to the DEF scheme, if the customer comes and asking for a withdrawal, it is the responsibility of a bank to provide the customer the withdrawal. Okay. Apart from that, next says the fund is the bank will pay the amount to the depositors or claimant and the claim refund from the DEF scheme. Okay. Now, next we have a nomination facility. The Banking Regulation Act 1949 amended by section 37 of the Banking Laws Act 1983 by introducing new section of 45ZA to ZF. So which provide inter alia for nomination facilities to the bank customer in respect of deposit accounts, safe deposits, safe vault, lockers. So the form DA1 is for making nomination by depositors. Then second is DA2 it for cancellation of the said nomination to be made by the depositor, and form DA3 is for variation of the said nomination to be made by the depositor. Okay, so these are the 3 forms that have to be utilized. Fixed deposit, if we talk about, is the simply a type of deposit which will be helping out to perform the to deposit the sum assured, like the total one-time deposit should be done here, and lump sum amount have to be submitted in a one time, and it will be withdrawal after a 7 day after a certain maturity that can be minimum 7 days and maximum 10 years. So these are the duration of FD. Garnishee order is an attachment order issued by a court under the Order 21 Rule 46 of Civil Procedure. Garnishee order is simply an order from the court that have to be given to the bank which attaches the credit balance in the account of the customer named to extent specified in the order. Like if any customer have not paid an amount of money to the another customer, in that case court gives the order to the bank to block a certain amount of money in the person's account who have to make the payment. So first of all, that if we talk about, if no amount is specified in the order attached, all sum owing and acquiring to the customer in the account will be applied on a Garnishee order, and check presented after service of the Garnishee order should be returned back with the remark refer to the drawer. And the service of the Garnishee order Nishi is the preliminary proceedings of the court in which the bank have to define that why this amount have not been paid yet. And the order applies only to the balance in the account of a customer at the time of receipt of the order. If after the receipt of the order any balance accepted, in that case the Garnishee order won't apply on it. Attachment order is actually similar to the Garnishee order, but the attachment order is actually issued by the revenue authorities, like the custom officer, the income tax officers, they issue the attachment order. Okay. Now, next we have a check truncation system. This is the system which was introduced to stop the physical movement of a check, and it started taking the electronic image of a check. With the help of electronic image, we started clearing the check. It was introduced with effect from 1st of February 2008 and is now fully operational. And MICR based check processing has been discontinued in the country. The characteristics of CTS is that it is an electronic image of a paper. Only the banks involved and the clearing house involved, they can truncate the check. No drawer or holder can truncate the check. Truncate means converting the check into electronic image or taking an electronic image of a check. Then the electronic image of a check truncation substitutes the physical check from point and time of truncation onwards. It means you do not have to submit your or transfer your physical check. Truncation is done only during the course of a clearing cycle to reduce the time taken for realization. Also, the paper check after truncation is kept in the custody of the bank or clearing house who have performed the truncation. In addition of the digital signature of the truncating bank clearing house to the electronic image of the check, truncation is optional here. Okay. After that, the approach to CTS is there. CTS is operated on a grid basis, dividing the country into 3 grids: northern, western, southern, each having a separate clearing house located at Delhi, Mumbai, Chennai respectively. So check pertaining to all the city centers in a grid are presented to the respective clearing house and through a service branch of the bank. So there are 3 types of participant. One is a member bank of a clearing house. Second is a some member bank who will participate through the member bank. Third, indirect member who can participate for submission of data images through a member bank but will maintain a separate settlement account. Okay. Now, if we talk about the CTS Pro, first CTS 2010 complaint instrument can be presented for clearing through the CTS. First, it goes to the presenting bank, then the presentation clearing, then paying bank, then return clearing, and then settlement will be done, clearing cycle will be maintained, security features will be performed, and then last will be the endorsement of the funds will be done. So these are the process that have to be followed in the CTS transaction. Apart from the CTS check image, if we talk about, 3 images will be taken. The first will be a front grayscale, second will be a front black and white, third will be a back black and white. So these 3 images will be taken, and CTS in India uses a combination of grayscale and black and white images. Okay, so 3 images are there. Images quality will be also checked, like the quality check process with the image quality assessment at different levels will be taken by the bank. Okay, so there are 3 images. Then we have CTS positive pay system, which was introduced by RBI on 1st January 2021, in which the optional amount is 50,000 and above, in which it has been said that the customer or the drawer have to reconfirm the key details of a large value check they have given to someone, and this reconfirmation can be done electronically with the help of SMS, mobile app, internet banking or ATM. Apart from that, the key details that have to be submitted will be date, name of a beneficiary or payee, or the amount of a check. These details have to be given by the drawer to the bank. It is optional for the 50,000 and above amount of check, but it became mandatory for the 5 lakh and above amount of check. Okay, do remember both. Now, in case of insurance, all cash remittance in transit are covered under the blanket insurance policy, which is obtained by the bank. Blanket insurance policy is simply a policy in which in one particular policy all the deposits will be covered, all the kinds of deposits will be covered for the insurance. So it must be ensured that the maximum limit let down therein for any one carriage is not exceeded under any circumstances. Also, cash in safe and on the counter should be kept within insured limit as directed by the head office from the time to time. Also, the care should be taken to ensure that no excess cash over the insured limit is kept in a bank branch. So the insurance will be there of the cash amount with the bank under the blanket insurance policy. Okay. Next, we have a mandate. Mandate, if we talk about, it is your unstamped document. If we talk about the mandate, it is the unstamped document. The definition says that a person competent to enter into a contract may authorize another person to open and operate an account on behalf of his, on his behalf. So this authority can be granted by a mandate or a power of attorney. Mandate is an authority given by an account holder in favor of a third person to do a certain act on behalf of him. Okay, the following are the certain silent features of a mandate. The first, customer inform the bank about the authority given to the third party. The signature of the mandate is verified by the customer in the mandate letter. The mandate is normally temporary and for a very short period of time. If we talk about institution, they need to issue a power of attorney and not a mandate. Individuals issues the mandate. Mandate ceases to be valid on death, insanity, insolvency, bankruptcy of the account holder. And a mandate can be withdrawn anytime by the account holder. And it is what? Unstamped document. Power of attorney is a stamped document. If we talk about the power of attorney, it is executed by one person who is called donor or principal in favor of the another person who will be called the donee or agent to act on behalf of the former as per the authority given under the power of attorney. Power of attorney is of two types: general, universal, or specific, limited. General power of attorney is issued for acting in more than one transaction and converts very extensive power to be done to the domain. But in a specific or limited power of attorney, it is issued for a specific purpose and often it is for a single transaction. Now, power of attorney, if we talk about, is a stamped document. It is executed in the presence of notary public, magistrate of a court, or a government official authorized to do so. And power of attorney revoked by the death, insanity, or insolvency of the principal. And the principal can revoke the power of attorney at any time for the future transaction. Okay. Now, right of set off is simply when a bank and customer have a debtor creditor and a creditor debtor relationship. Only then the right of set off relationship or the right of set off can be utilized by the bank. In the right of set off, it is a statutory right and can also arise out of an agreement between the parties concerned. In an ongoing situation, the right of set off can be exercised by a banker by serving a reasonable notice on the customer. There should be no agreement between the bank and customer to exclude the right of set off. Also, there should be mutual debts, and debts should be for the certain sum, while the claim and the cross claim should be for the certain sum. The claim, cross claim should be both for determined amounts. Where the customer has stood as a guarantor to another party, his credit balance cannot be set off against the borrower's due till the guarantee also is determined. Also, for the purpose of set off, all bank branches of a bank are considered as a single entity. So, when the bank set off is a right of a debtor to take into account debt owing to him by a creditor when paying a debt dues from him to the creditor. Okay, so it will be a kind of bank has a right of set off between two or more accounts which are maintained by a customer, and bank can adjust the debit balance in one account with the credit balance in the another account. And this is only possible when the banker customer have a two types of relationship, that is creditor debtor and debtor creditor, any one of them. Okay, so in simple language we can say the banker can adjust his claim from the amount that is payable to the customer. Also, the set off can be applied only to those debts where the due and recoverable on the date of exercising the set off. The set off cannot be applied in respect of your debts that are contingent and not yet due. If you want to perform the set off, the debt should be due. Then we have indebtedness should arise in same rights where the bank has noticed that the amount in the customer account is held under the trust. The bank cannot exercise the right over the amount against a debit balance or another account of the customer. The deceased credit account and a customer's debit account cannot be combined. Also, the automatic right of set off arise in the certain cases, that is the death or insanity, insolvency of a customer, insolvency of a partner or the winding up of a company, receipt of garnish order, receipt of notice of assignment of customers' credit balances, receipt of a notice of secured mortgage over the security charged by the bank. So, if any of these situation arises, automatic right of set off can be arise. Also, the account of a sole proprietor and his individual account can be combined for the right of set off, and the right of set off is available to the banker only in respect of credit balance held in customer's account. So, these are the certain conditions of your right of set off that have been given by the bank, like essential features of the right of set off, when it can be performed and when it cannot be performed. Now we have a liberalized remittance scheme which was introduced by RBI in 2004. Liberalized remittance scheme allows the outward remittance to transfer the fund from India to abroad in one financial year, that is $2.5 lakh, and it is allowed to individual residents including the minors. You can see it is available to the residents individual including minor. It is not available for the corporate, partnership firm, Hindu undivided family or trust. Remittance can be consolidated in respect of family members subject to the individual family members compiling with the terms and conditions. For capital account transaction, clubbing is permitted only if other family member are co-owners or co-partners of the overseas bank account, investment or property. Also, the maximum amount permitted in a one financial year, that is $2.5 lakh per head, including minor. There is no restriction on the number of transactions. Release exceeds the limit, it requires permission of RBI. If more than $2.5 lakh you have to invest, you need a RBI's permission. Indo-Nepal remittance facility is there, which is a one-sided facility. From India to Nepal, fund can be transferred by those persons or the migrant Nepalis who are working in India, but they want to transfer their fund to their family who is living in Nepal. So this was introduced in 2008 May as an option for the cross-border remittance from India to Nepal. Okay, and with a special focus on requirement of a migrant workers of Nepali origin who are working in India. So the target group is the migrant Nepalis who are working in India who make remittance to their families. The system was launched with the only one-way remittance from India to Nepal. No Nepal to India transfers are allowed. Also, a ceiling of 2 lakh rupees is fixed for per remittance if the Nepali migrant is your customer and performing a account-based transaction. If a person is a cash, if a bank get a cash from the walk-in customer or a non-customer, then the amount is 50,000 per head and maximum 12 remittances will be allowed in one financial. Okay, the remittances from India are in the Indian rupee and it will be received in the Nepal in the Nepalese rupee. And bank can also provide the facility to both account holders as well as non-account holders. If a Nepali migrant worker do not have a bank account in India as well as in Nepal, still he can transfer money to their family. But yes, they have to give their identification properly by giving a passport, PAN driving license, telephone bill, certificate of identification issued by the employer in India with detail and photograph, etc. So if they do not have a bank account in both sides, still by providing the proof of their identity, they can perform the transfer under the into Nepal remittance. That's a one-sided scheme. Fund will be transferred from India to Nepal only. Okay. Now we have a non-resident external account, non-resident ordinary account, and foreign currency non-resident account. So first of all, who can open the NRE account, FCNR account? NRE and FCNR account can be opened by NRI and PIOs. Individual entities of Pakistan and Bangladesh shall require prior approval of RBI to open this account. In case of NRO, it can be opened by any person resident outside India. It means NRI, PIO, OCI, they can open this account. Joint account can be opened in NRE and FCNR account. It may be held jointly in the names of 2 or more NRIs or PIOs, and NRIs and PIOs can also have a joint account with the Indian resident on a former survivor basis. It means till the NRI is alive, he will be managing the account, and after his death, the account will be, money will be transferred to the survivor. Okay. In case of NRO, it will be opened and jointly in the names of 2 or more NRIs or PIO, and may be jointly opened with the resident in India on a former survivor basis. Next, currency. NRE account and NRO account will be in Indian currency, but FCNR account will be in the foreign currency. Okay. Taxability in the NRE account and NRO account, the income earned in the account is exempt from income tax and the balance exempt from the wealth tax in both the NRE and NRO account, but NRE and FCNR account, but NRO account is taxable account. It is what? It is a taxable account. In NRE account, we maintain the money which is earned from abroad, and in NRO account, we maintain the money which have been earned from India only. That's why the taxation differences are there. Now, the NRE and NRO account can be opened as a savings, current, recurring and fixed. All the 4 types of account can be opened, but FCNR account will only be FD in foreign currency. Then the period of deposits in the NRE account will be from 1 year to 3 years. However, banks are allowed to accept NRE deposit above 3 years from their asset liability point of view. In NRO account depends on applicable to resident accounts, like the limit in the resident account, so the same will be there. In case of FCNR account, it is for not less than 1 year and not more than 5 years duration. Repatriability, NRE account and FCNR account is repatriable. It means you can transfer the money back to abroad. But in case of NRO, it is non-repatriable except for all current income. Balances in NRO account of NRI and PIO are remittable up to $1 million per financial year. Okay. The next thing is that permissible credit. In the NRA and FCNR account, credit permitted to these accounts are inward remittance from outside India. Interest acquiring on the account, interest on investment, transfer from NRE FCNRB account, maturity proceeds of investment, they all are allowed to be transferred. The current income like rent, dividend, pension, interest will be constructed as a permissible credit to NRE account, and only those credit which have not lost repatriable character will be covered in these accounts. NRO account include inward remittance from outside India, legitimate dues in India, and transfers from other NRO accounts are permissible credit to the NRO account. If you get a rupee gift loan made by resident to a NRI, PIO relative within the limits prescribed under the liberalized remittance scheme may be credited to the latter NRO account. Also, if we talk about the permissible debits are local disbursement, remittance outside India, transfer to other NRI and FCNRB account, and the investment in India are permissible in NRA and FCNR account. In the NRO account, permissible debit is the account can be debited for the purpose of local payments, transfer to other NRO account, or remittance of the current income abroad. Apart from these, balances in the NRO account cannot be repatriated abroad except by NRI and PIO up to the $1 million, subject to the conditions specified in the foreign exchange. Okay, and the rate of interest as guidelines issued by the Department of Regulation of RBI, time to time that rate of interest will be charged or will be paid, not charged, will be paid. Okay, so these are the NRE, NRO, FCNR account. EEFC account is exchange under foreign currency account. It's a type of current account. No interest will be paid in the EEFC account. This account can be opened by the resident, individual and corporate who are the foreign currency earners. Only they can open this EEFC account. Otherwise, the persons who are not earning the foreign currency and who are not resident in India, they cannot open this account. So EEFC is a current account. No interest will be paid, opened by resident individuals and companies who are foreign exchange earners. RFC account, resident foreign currency account. It is a person resident in India is permitted to open the RFC account with the authorized dealer bank in India out of foreign exchange received or acquired by him. Okay, received and acquired both will be maintained in the RFC account. In RFCD account, that is the resident foreign currency deposit domestic account, a person individual may open a RFCD account to retain in a bank account in India the foreign exchange acquired by him or her. Only acquired amount will be maintained in the RFCD account. Then we have a diamond dollar account. The firms and companies which compile with the eligibility criteria, they stimulate in the foreign trade policy of the government of India, they may open the DD account, diamond dollar account. One firm can have maximum 5 accounts only. This account will be only in US dollars. Okay, for the release of export proceeds and local sales in US dollar of rough cut polished diamond and pre and post shipment finance availed in the US dollar. Second, payments for purchase of rough cut polished diamond can be made. Funds can be transferred to the rupee account. Also, the account should be non-interest bearing current account. It means here also interest won't be paid. Next, the cash management services refer to the collection, concentration, disbursement of cash. It encompasses the level of your liquidity, the management of cash balance, the short-term investment strategy. So cash management services means it is helping you out to manage the liquidity so that you will be able to take a right decisions at the time of uncertainty. And simply cash management simply means collection, concentration, disbursement of the cash. Now, what are the benefit or importance of cash management for banks? So, deregulation and new technology have eroded the bank's comparative advantage and made it easier for non-bank competitors to enter into the market. So, the banks have started seeing risk in the fund-based facilities, but the non-fund-based facility, there is a huge chances for bank to earn a risk-free money. So, after studying the market, it has been said that this is the new opportunities and threat in the Internet age by Calvin Associate again, the market for retail and commercial fee-based financial system. And like the fee-based services have a chances of risk or chances of threat. But in case of non-fund based facilities, it have been said that there is still chances of growing, there is still chances of getting a huge returns. So that's why the cash management services offered to the Indian corporates are comparable to what their counterparts are getting in advanced countries. So this cash management service will help the Indian banks to gain the non-fund based credit facility and will earn the better fee income on this facility. Now the product offered by bank, they offer the cash collection services. Like bank have implemented various customized cash pickup solution to meet the specific requirement of their customer. These solutions include provide the benefits to the customer like minimization of the operational risk, reduction in the cost, and security is there, increased efficiency is there. So direct credit by fund transfer will also be available for the customers by the bank. Okay, apart from that, check DD drawing arrangement is there, NEFT payment electronic channels are there, receivables management, check collection is there, NACH payment facility is there, and auto sweeping facility is there. All these facilities are banks providing under the cash management services. But banks also have a challenges when they are providing a cash management service. The first challenge is bank have to comprehend the client's line of activity. Like bank have to know like what are the other product services or what are the other product line the client is providing, to understand the purpose solution of a client and what actually the client is looking for. Okay. Second, so it's simple that bank have to learn about the concerned industry. Second challenge bank have is provision of other advisory services to the client. So companies who are taking a cash management services, they would like also like the banks will solve their certain other but related problems as well. So changing system is a major initiative with the far reaching implications to the companies. So bankers cannot work with a standard solution always, so they have to find out the standard. There are no standard problems in the companies, so there will be no standard solution. So bank have to keep looking and keep finding the right solution for the right problem. Decision regarding sourcing of software, there are three cases. First, the software can be built in-house, like you can build your own software. Second, you can bought from the independent software vendor, like you can purchase the software. Or third, you can outsource the software from the third party. So this decision is also a kind of challenge in front of bank. What should be done? Fourth, we have a special consideration to small medium companies. So it is actually the corporate sector in India is dominated by the multitude of small and medium companies. So banks may work out of strategy to make a high-tech cash management service which is accessible to small and medium companies. That is one of the challenge. One challenge is that a coordinating activity. Bank have to make sure that banks work with the system people and sometimes marketing people, sometimes the sales people. So you have to make a coordination among each and every activity of yours. Security and risk management is there. Corporation lose large amount due to internal and external frauds. So it's important that the security and trust will be the critical issues in electronic transmission and retrieval of important and sensitive information. So in that case, bank have to make the corporate trust on themselves, that on the banks, that there is a security feature we have introduced or a software we are using which will not let your data release or any kind of fraud. Operational reliability. Besides security, operational reliability is also important. Like one of the biggest challenges is making internet as a reliable business system, so that the communication send secure and so on time. Okay, so these are the challenges which bank face. Apart from that, we have a next negotiable instrument. Negotiable Instrument Act was introduced in the 1881 year, and it is the negotiable instrument means simply the transferable instrument. It covers three instruments: promissory note section 4, bill of exchange section 5, check section 6. These are the three negotiable instruments. Promissory note is simply an instrument in writing, not being a currency note or a bank note. It contains an unconditional undertaking which says that a certain sum of money will be paid by a certain person to the certain person on a certain date and on order or on the bearer. Okay, so that's the promissory note. Promissory note include two parties in which one party is promising the another party in the unconditional undertaking, like no matter what, I will make payment of yours on this particular date of this particular amount. That's a promissory note. Bill of exchange is also a instrument in writing containing an unconditional order. In bill of exchange, there are two or more than two parties can be involved, and in bill of exchange, the one party is promising the another party to pay a certain sum of money on order or on the behalf of bearer, and it will be unconditional order in which the drawer or maker is giving order to the bank, no matter what, you have to make the payment on this day. And the check is simply a type of bill of exchange which is drawn on the specified banker and not expressed to be payable otherwise than on a demand. So now check is CTS also available, that is check truncation system, which says that the physical movement of check should be stopped and the electronic image of a check will be taken to make the payments. Okay. Now the section 10 talks about the payment in due course, which says that the paying banker gets the protection available under various sections only if the payment of the check is due in the course, have been made in the due course. So payment in due course means everything, the balance, the details of the check and the validity of a check was all okay and the bank have made the payment, that's a payment in due. So payment in due course means simply payment in accordance with the apparent tenure, that is 3 months, that's the validity of the instrument in good faith and without negligence to any person in possession thereof, under circumstances which do not afford a reasonable ground for believing that he is not entitled to receive payment of the amount. Okay, they are mentioned. So on the right condition, without negligence, with the good faith, bank have made the payment within the validity period of a check, that is known as your payment in due course. Okay. Now endorsement of check is simply transfer of check, that says that one person by writing on the back side of a check can endorse the check to the another person. Endorsement in bank means you have written only the signature, you have done only the signature on the back side of a check, you have not written the name of the person to whom you want to transfer the check or you want to negotiate the check. So it means it can be negotiated without writing the name of a person. If you want to endorse it to someone else, you simply have to make the delivery of the check because already it is performed as a endorsement. So endorsement blank is simply the maker or the person of a check, the payee of a check, have actually done a signature on the back side of a check without mentioning the name of any specific. Okay. Endorsement in full simply means you have defined the name of a person, you have signed it, everything detail is required to be make the check transfer, you have written it, that's endorsement in full. Conditional endorsement, like we know, if I have issued a check to Mr. A and Mr. A have endorsed that check to Mr. B, in that case obviously my responsibility will be there that if B person have not got the payment, I have to make sure that the B person get payment. That's the general endorsement. But in conditional endorsement, I take back my liability, I exclude my liability. I have said that if this check will be further endorsed and the payment have not been made on time, I do not take any liability of this. That's a conditional endorsement, which is also known as without recourse endorsement, which is also known as a sans recourse endorsement. Okay. Now restrictive endorsement, in which you have restrict or exclude the right to negotiate or to receive its content for the use of endorsement, is your restrictive endorsement. So you have prohibited, like you have restricted or excluded the right to negotiate it to the someone else. And facultative is as per the requirement, the endorsee must give a notice of dishonor to the endorser, but the endorser may waive this right in writing in the endorsement. Okay. So like for example, pay to Srimati Manorama or order notice to dishonor waived. So these are the types of endorsement we have. Okay. Next we have a types of crossings. From section 123 to section 124, they deals with the types of crossing. General crossing, when there are two parallel lines on the left side of a check, which actually says that you cannot make the payment of a check in a cash, payment will be done only in account. If the payee do not have their own account, payee can endorse the check to someone else and can take a cash from him, but the payment of check cannot be made in cash. The special crossing says that the parallel lines will be there and they will be having an account payee with the particular bank's name specified, in which the payment of the check cannot be done in cash. The payment of the check will be done in a bank account of a payee, in the specified banker, okay, and it cannot be endorsed. If there is an account pay crossing, it means the payment of the check cannot be made in cash. The payment of the check will only be made in the account of the name of a payee. Otherwise, it cannot be endorsed as well. So general crossing, special crossing, account pay crossing, in all the three cases, no cash withdrawal will be given, or no cash payment of a check can be done. Okay, on all of the three, the money should be given in account. In cross check or in general crossing, if the payee do not have an account, he can endorse on the someone else's account. In account pay crossing, the payee have to have their own account. In case of special crossing, the payee have to have their account in a special bank. And non-negotiable crossing means it removes the negotiable character of the instrument, and the transferee cannot have a better title than the transferor had. Okay, next, the dishonoring case. Dishonor is the situation when bank return the check unpaid to the drawer. There are certain reasons of that. It can be insufficient funds. In case of insufficient fund, there is it is also known as a bounce of a check, and in case of insufficient fund, imprisonment and fine have to be paid by the drawer. Second case is no arrangement, exceed arrangement, payment is stopped, refer to drawer, closure of the account by drawer. If any of these instructions have been given, in that case the check will be returned unpaid to the drawer, and that is known as dishonor. Apart from this, with the introduction of CTS grid based clearing center, certain other reasons have been emerged for the dishonor, that is present in proper zone, present with document, paper not received, digital certification validation failure, alteration in instrument other than the date failed. So if any of these have been there, in that case as well, the check will be returned unpaid or dishonor. Okay, now the certain important sections of NI Act, section 31 applies only to banker, and this is because as per the section 6, check is a bill of exchange drawn on a specified banker. Sufficient funds means the banker should have a sufficient fund of the drawer that to make the payment of a check. Properly available, the funds available in the customer account should also be properly available. Like the sufficient fund is there, but that fund is in the account for the purpose of the payment of a taxes to the government. It means the amount is not properly available. The sufficient fund should be there in the drawer's account as well as the properly available. Now, when duly required to do so, it means that the check must be properly drawn and signed by the drawer. Also, if we talk about the compensate the drawer, in case the banker refuses the payment wrongfully, then the banker is liable only to the drawer of the check and not to the any endorsee or holder. The bank is wound up, in which the case the holder becomes a creditor entitled to make a claim. And if the check is paid disregarding the crossing, the true owner can hold the bank liable, and bank have to pay the compensation. Loss or damage caused by default, a banker is liable to the drawer for any kind of damage, or we can say any kind of loss or damage due to the wrongful dishonor of the customer's check. In that case, bank will be liable. Section 85 grants protection to a banker on his making payment of a check in the due course. Okay, now section 89 gives protection to the paying banker for a check which has been materially altered but does not appear to have been so altered. So if the payment is made according to the apparent tenure and time of the payment and otherwise in due. So the check was altered, but when you have seen the electronic image, you have carefully look after it, it was not seems like altered. In that case, the section 89 gives protection to the paying banker. Section 10 defines the payment in the due course that we have already discussed. Section 31 obliges the drawee bank have sufficient fund of the drawer in its hand and properly applicable to the payment of such check to make the payment when duly required to do so. Okay, so these are the certain important section of your Negotiable Instrument Act. Now, statutory protection of a collecting banker. So section 131 grants protection to a collecting banker. If we talk about this, the conditions for protection will be the collecting banker acts in a good faith, it acts without the negligence, it receives payment for a customer, the check is crossed generally or especially to the collecting banker, it verifies the prima facie genuineness of the check for the collecting payment under the CTS clearing, it looks for any fraud, forgery, tampering that can be verified with due diligence and ordinary care, and it is apparent on the face of the check to be truncated. So if any of these conditions are there, in that case the protection under section 131 will be available to the collecting banker. Okay. Now remittance introduction, if we talk about here, the remittance means the transfer of fund from one person to one place to another person, one place to another place, or from one person account to another person account. So remittance means transfer of fund from one branch of a bank to the another of a same bank or a different bank. Customer can make remittance with the city through banker checks for remitting fund from one center to another. The demand draft, mail transfer, telegraphic transfer, NEFT, RTGS, all the specified services can be used. The implementation of core banking services emerged of fintech services and the ease of doing digital payment. They made fund transfer through mail transfer and telegraphic transfer almost extinct. Like the mail transfer and telegram transfer is not available right now. Now, the introduction of financial inclusion says financial inclusion is simply a process in which we try to link each and every person with the financial product and services at an affordable cost. Okay, and financial literacy is simply the process by which people improve their knowledge and understanding about the financial product and services, which help them to take the sound decision regarding the investment of financial product and services. If we talk about the financial inclusion and financial literacy, they are twin pillars. So financial literacy stimulates the demand side and making people aware of what they can demand. So after financial literacy, people become aware about the benefits of financial product and services. So they create the demand of the financial product and services. Second, we have here the financial inclusion. Financial inclusion includes, or financial inclusion is simply a process to link each and every person with the financial product and services. So the financial inclusion activates, stimulates the supply side of by the OECD, providing the financial market services what people demand. So financial literacy stimulates the demand side and the financial inclusion estimates the supply side. And it is easy to understand, after the financial literacy, people will be able to take a sound decision. That's why they are creating demand. And the financial inclusion try to link each and every person with the financial product and services. That's why it provides the supply side. Now, Rural Self-Employment Training Institute, RSETI, is there. It is the institute initiative by the Ministry of Rural Development to provide the dedicated infrastructure in each district for imparting the training and skill upgradation of the rural youth, which is aimed at entrepreneurship development. So RSETIs are managed by banks with the cooperation from the Government of India and the state government. So this initiative is based on the model of your Rural Development and Self-Employment Training Institute of 1960, in which we are simply saying that we will provide the training to the rural youth, and that will be creating them helpful for the getting job. So each RSETI is expected to offer 30 to 40 skill development program in one financial year of 1 to 6 week duration. It covers various areas. It covers your agriculture program, your product programs, your process programs, your general programs, in which the training will be given to them. Okay. Objective says that the purpose of RSETI is that rural BPL youth are identified and trained for the self-employment purposes. First, the training will be offered to be demand driven. It's not like it's mandatory for the people to come and take a training. It's not like you will go to home of a person or door to door and take certain youth from the families and give them the training. No, it's a demand driven. The person who demand for it, he will get the training. Area in which training to be provided to the trainee to be decided after assessment and the candidate's aptitude. Hand holding support to be provided for assured credit linkage with the banks. Escort services to be provided for at least 2 years, soon to ensure sustainability of a micro enterprises. And the trainees to be provided intensive short-term residential self-employment training program with the free food and accommodation of 1 to 6 week duration. Okay. Now, ultra small branches, if we talk about, RBI has permitted banks to establish outlet of ultra small branches in the rural center, for which the banking correspondents may operate. So these are the low cost simple brick and mortar structure. It means it's a physical branch Every business banking correspondent outlet is under the oversight of a base branch. So these ultra small branches may be set up between the base branch and the banking correspondents location. So as to do what? As to provide the support to about 8 to 10 banking correspondence unit at a reasonable distance of 3 to 4 kilometers. So these are ultra small branches which will be taken care by the banking correspondent, and they should have a core banking solution terminal linked to a passbook printer and a safe for cash retention. So they should be managed by full-time of bank officers, employees, and these shall be treated as independent banking outlets or a part-time banking outlet. Okay. Now, next we have limited liability of a customer in unauthorized electronic banking transaction. A customer is entitled to zero liability if there is a contributory fraud, negligence, deficiency on the part of a bank. In that case, customer is not liable for any kind of compensation or any kind of loss. Second, if there is a third party breach and there is no deficiency with the customer or the bank, but elsewhere in the system there was a deficiency, in that case also the customer do not have any liability. Yes, the customer will be liable for the loss if it is due to her negligence until she reports the unauthorized transaction to the bank. Okay, the customer will be what? The customer will be liable for the loss if it is due to her negligence until she reports the unauthorized transaction to the bank. Okay, so what are the maximum liability of a customer here? In case of basic saving bank deposit account, maximum liability will be 5,000. In case of all savings bank account, prepaid payment instrument and gift cards, your current cash credit overdraft account of MSME, your current account cash credit overdraft account of individual with the annual average balance or limit up to 25 lakh, credit card with limit up to 5 lakh, they all have a maximum liability of 10,000. All the other current account, cash account, overdraft account and credit account with the limit above 5 lakh, 25,000 will be the maximum liability. These liabilities of a customer. Okay. Also, for delay in reporting beyond 7 working days, the customer will be liable and it will be decided by the bank board approved policy. Okay, it might be more than the maximum liabilities we have seen. It will be more than that because the delay on reporting have been done from the side of a customer. It goes beyond the 7 working days. The credit shall be validated as of the date of the unauthorized transaction. Okay. Now there is a duty of a bank to maintain the secrecy and confidentiality. It means the information of a customer, the information, any kind of personal information or financial information of a customer should not be shared with any party by the bank. The scope of secrecy of law in India has generally followed the common law principle based on the implied contract. So debtor-creditor relationship between a bank and a customer is of a special kind. It is a contractual relationship that has implied obligation to keep the affairs of the account of customers secret and confidential. But there are certain exceptional cases. There are certain exceptional cases in which bank can disclose the information of a customer. The first is where the disclosure is under the compulsion of law. Like by the court, you have got the order to share the information about a certain customer's account. Second, there is a duty to the public to disclose. There is a certain responsibility or a duty of a bank to let the public know about this transaction. Third, where the interest of bank requires disclosure. When the bank, it is good for the banks, if it is good for the bank transaction, it is good for the bank to disclose that information. And fourth, where the disclosure is made with respect to the express or implied consent of the customer, in which customer says that share this information of mine with this party or that party. Okay. Now we have an integrated ombudsman scheme 2021, which was created in 2021 by merging 3 different ombudsman schemes. First is ombudsman scheme to 1995. Second is ombudsman scheme for non-banking financial companies 2018. Third is ombudsman scheme for digital transaction 2019. All these 3 schemes have been merged together and created an integrated ombudsman scheme. The ombudsman is a senior official appointed by RBI to redress the customer complaint against the deficiency in a certain banking services. So as of November 2021, we have a 22 ombudsmen. They were appointed with the offices located at the RBI officially, mostly in the state capital of a state. Okay. Now the complaint will, all the complaints, whether it have been done by any way, all the complaints under integrated ombudsman scheme will be received at a central receipt and processing center Chandigarh. Earlier it used to be go to the directly the ombudsman, but now all the complaints will go first to the Chandigarh CRPC, and from the Chandigarh CRPC it will be forwarded the complaint, it will forward the complaint to the concerned ombudsman. Okay, but first it goes to the CRPC Chandigarh. Then the procedure for filing complaint, you can complain with the online portal, you can do electronic mode like mail, you can do the physical mode by post or courier, or hand delivery can be done. Now the award amount will be, compensation will be actual amount involved in the dispute without any ceiling, or the compensation of consequential loss to the extent of actual loss with the ceiling of 20 lakhs. That's the maximum award amount. And the compensation for loss of time, expenses incurred, harassment and mental anguishes suffered up to ceiling of 1 lakh. So appellate authority is now the executive director in charge of the RBI department administering the scheme. So earlier the deputy governor of the RBI used to be the appellate authority. Now the executive director in charge of RBI will be the appellate authority. Okay. Now next we have the silent new aspect of a Consumer Protection Act 2019. The Consumer Protection Act 2019 widened the scope of protection to the consumer by covering even advertising claims, endorsement and product liability, the tools used in modern trade to woo the customer. It also provides enhanced protection to cover the new age delivery channel of e-commerce like online sales, tele-shopping, direct selling, multi-level marketing, etc. And the new silent aspects of the Consumer Protection Act 2019 include, it defines specifically the consumer rights, it adds the feature of unfair contract, it introduces the product liability action, it defines the design and include interrelated aspect, it include your e-commerce and electronic service provider, it include your advertising and endorsement, it adds express warranty parameter, and it also distinguishes between the manufacturer, product seller and product service provider. All these will be differentiated by the CPA. Okay. Now the consumer rights are there, like consumer have a right to be protected against any goods or service which is dangerous for the life and property. The right to be informed about the quality, quantity, potency, purity, standard, price of the goods, product or services. This right have been there to the customer. And also we have to protect the the consumer against the unfair trade practices. Then the consumer rights include the right to be assured wherever possible access to variety of goods, product or services at a competitive pricing, the right to be heard and to be assured that consumer interest will receive due consideration at the appropriate forum. Also the right to seek redressal against unfair trade practices or restrictive trade practices or unexpected exploitation of a consumer. It also gives the right to consumer awareness as well. So these are the rights that have been given under the Consumer Protection Act 2019 to the consumer. But there is a penalties also. Penalty for non-compliance of direction of the central authority says that a person who fails to comply with any direction of the central authority shall be punished with the imprisonment for a term which may extend to 6 months or with the fine which may extend to 20 lakh or with both. That penalty have to be paid. Okay. Now Right to Information Act talks about section 3 of the act says, subject to the provision of this act, like all citizens have the right to information, thus the right to information is conferred upon the citizen of India. Okay. Apart from that, right to information accessible under this act which is held by or under the control of any public authority and include the right to inspection of work, document, record, taking notes, extract or certified copies of documents or record, taking certified samples of material, obtaining information in the form of discs, floppies, tapes, video cassettes or in any other electronic mode or through printout where such information is stored in computers or in your other devices. Okay. Apart from that, the procedure for obtaining the information is what? A person shall make a request specifying the particulars of information which is sought in writing or through electronic means. It can be in English, Hindi or official language of the area. Okay, with the help of this writing request, you can ask for any kind of information. Now, in case of disposal of request, norms for disposal, the time limit will be within 30 days. The information should be provided or the request should be rejected. But if there is a concern the life or liberty of a person, then the information should be provided within 48 hours of the receipt. And failure to decide within the specified period is deemed to be refused. Additional fee have to be paid for the printed or electronic form. If information is given in printed or any electronic format, further reasonable fee will be charged. That will be 2 rupees for each page in A4 and A3 size. Actual charge or cost price of a copy in large or size paper. Actual cost or price for sample or models, and inspection of record, no fee for the first hour, and 5 rupee for each 15 minutes or fraction thereof thereafter. If there is a delay from the side of the public authority in providing information, then information have to be provided free of charge. Rejection, if rejected, then the PIO shall inform the reasons, the period within which an appeal may be referred, and the particulars of the appellate authority. This information have to be given by the authority. Okay, next, the payment of fee. The application shall be accompanied by a fee of ₹10 paid in cash against receipt or by demand draft or by banker's check or by Indian postal order. By any of these way, the payment of the fee that is 10 rupee can be done. Then there is a Central Information Commission that have been created by the central government. So Chief Information Commissioner will be there and Central Information Commissioner will be there, which should not exceed 10, and they all are appointed by the President on the recommendation of a committee consist of Prime Minister as a chairperson, leader of opposition in the Lok Sabha, and the Union Cabinet Minister, which will be nominated by the Prime Minister. Apart from that, next State Information Commission will be there, that was established by the state government. It covers a State Chief Information Commissioner and a State Information Commissioner, not more than 10. And the appointed will be committee appointed by the committee, in which chairperson will be Chief Minister, leader of opposition in Legislative Assembly, and a cabinet minister will be there. Okay. Now the penalties are also there, like the Central Information Commission may impose a penalty of 250 rupees for each day till the information is furnished. It's subject to maximum 25,000 rupees. Okay. So commission may recommend disciplinary action against the Central Public Information Officer under the service rules if he, without reasonable cause, persistent failed to receive an application, has not furnished the information within the time specified, with malified intent it denied the request for the information, knowingly has given incorrect, incomplete or misleading information to the person, destroyed the information which was the subject of request, and obstructed in furnishing the information. If any of these acts have been performed by the Central Public Information Officer, that the commission may recommend what action should be taken against the person. Okay. Now next we have a cardinal principles of lending. The cardinal principle of lending is simply, business of lending is not without certain inherent risk. No matter what loan you are providing, to whom you are providing, what collateral you have taken, every loan have a risk. So especially when the lending banks depend largely on the borrowed fund, the cardinal principle of lending are therefore as follows. First, safety. Second, liquidity. Third, profitability. Fourth, purpose. Fifth, diversification of risk. And sixth will be your security. So these are the 6 cardinal principles of lending. Okay. Now we have a type of credit facility, that is fund based and non-fund based. Fund based credit facilities are these involve the outflow of fund, thereby the money of the banker is lent to the customer, which include your cash credit, your overdraft, your term loan, your demand loan, your bill finance. Non-fund based credit facility is this when the bank's funds are not directly lent to the customer, and this include your bank guarantee, your letter of credit and acceptance facility. So these are the non-fund based credit facility of a bank. Okay. Apart from that, there are 7 aspects of ascertaining, like credit worthiness, character, capacity, capital, collateral, condition, cash flow. All of these have to be seen before providing a loan. So assessment of loan for different purposes is done in different manner, as factors affecting these differ in several respects. So the capital required for business enterprises can be classified in 2 categories, fixed capital and working capital. And there are 2 concepts of a working capital, that is a gross working capital and a net working capital. So bank try to fund the gap or extend the need based financial assistance to the public. Bank also adopt one of the following 4 methods for the assessment of the working capital requirement, on which you will find numerical as well, might be in the paper. These are the method: turnover method, operating cycle method, maximum permissible bank finance, and the cash budget method. These are the 4 methods by which the working capital requirement will be calculated. Okay. Now categories of NPA we have, that is if we talk about the assets of a bank, the assets of a bank is divided into 2 categories. One is a standard asset, one is non-performing asset. Standard asset further divided into 2 categories, that is regular asset and a stressed asset. Regular asset means in which regularly principal and interest have been paid by the customer. Stressed asset includes your special mention account. Special mention accounts are the early identification of a bad debts, in which 3 categories of account is there: SMA 0, 1 to 30 days, SMA 2, 31 to 60 days, SMA 3, 61 to 90 days. These are the duration in which the customer have not paid the installment, including principal and interest amount. After 90 days, this special mention account 2 converts into NPA, and after converting into NPA, it creates 3 type of categories of assets: substandard asset, doubtful asset, and a loss asset. Substandard asset simply means those assets which remain NPA for a period less than or equal to 12 months. Okay. So such asset will be well-defined credit risk weakness that jeopardize the liquidation of a debt and characterized by the different possibilities that the bank will sustain some loss if deficiencies are not corrected. Second, doubtful asset would be classified as doubtful if it has remained the substandard category for a period of 12 months. And the loss asset is one where the bank or the internal or external auditor or the RBI inspection has identified the loss, but the amount has not been written off wholly. So they have said that this is the amount which cannot be recovered, but it have not been fully written off. The amount have not been fully written off. Okay. Then these are the special mention accounts. So early identification of bad debts can be done with the help of a special mention account. SMA 0, 1 to 30 days, SMA 1, 31 to 60 days, SMA 2, 61 to 30 days. In the case of revolving credit facility like a cash credit or SMA, subcategories will be SMA 1 and SMA 2. SMA 1, 31 to 60, SMA 2, 61 to 30. These are the categories of a special mention account, and do remember, special mention accounts are actually are the early identification of a bad debt. Now the willful defaulters, those defaulters who have money but willingly they are not trying to make the payment of a bank loan. So willful defaulter and non-cooperative borrowers are there. So the provisioning in respect of existing loan or exposure of a bank to a company having director whose name appear more than one in the list of the willful defaulter will be 5% in case of a standard asset. In such account is classified as NPA. So you can see the substandard asset which is secured, period of as NPA is up to 6 months and 6 months to 1 year. The regular provisioning was 15 for both cases. In the revised provisions, in the up to 6 months it is still 15 months, but 6 months to 1 year it have been changed to 25%. And the second, if we talk about the next, for substandard unsecured loan up to 6 months it is 25% now. From 6 months to 1 year it is 40% now. Okay. Now doubtful 1 asset for second year, 40% for secured, 100% for unsecured. Doubtful asset 2, third and fourth for 100% for secured and unsecured, and doubtful asset 3, 100%, and as well as the loss asset will be your 100%. So these are the provisioning that have been said to be done in case of your type of NPA assets. Okay. So this was our chalice of PPB. I hope it will be helpful for all of you in your paper. A lot of content we have discussed in a certain period of time. Do make sure you check this session out. Also check the session of last year's Chalisa, in which we have covered the C and D module in detail. So that's all for today. Let's end the session here, and I see you all in the next session of your analysis at 11 AM only on JAIIB CAIIB English Medium channel. So last but not the least, all the best everyone. Be calm, stay confident, be positive that yes, we will be clearing this paper. Do not panic in the paper. Do not have any perception before entering in the examination hall like the paper will be this or paper will be that. Don't have this perception. Just trust yourself, be confident, be positive. We can clear this paper. So once again, all the best everyone, and do not forget to subscribe to the channel JAIIB CAIIB English Medium and press the bell icon for connecting with the more upcoming sessions on the channel. Thank you all.